Lately it feels like the crypto market has a serious split personality. On one side, you've got this huge wave of serious institutional money knocking on the door, ready to come in. But on the other, you've got that classic, absolutely wild volatility that threatens to knock the whole house down.
So what gives? What is this market really? Are we looking at a safe place for investors to hide out, a super high-stakes casino, or just maybe are we watching the very beginning of a financial revolution? All right, let's dig into the signals and see if we can piece this puzzle together.
And this, right here, is the central conflict. You have the biggest, most established names in finance building on-ramps and infrastructure for crypto. But at the exact same time, these insane price swings are still the name of the game. It's like a constant tug-of-war between stability and chaos.
To really get a handle on this, let's start with our first argument, this whole idea of crypto being a digital refuge. Could it actually be a shield in what's feeling like a pretty stormy global economy? To figure that out, we've got to zoom out and look at the bigger picture.
Right now, the financial climate is, well, it's shaky. We're seeing absolutely massive global debt that just keeps piling up, and that creates a ton of uncertainty everywhere. Now, when that happens, investors, from the biggest hedge funds down to folks like you and me, start looking for shelter. They're trying to find assets that can protect their money.
And what's so fascinating is that this sentiment is growing louder. You have influential people like Robert Kiyosaki coming out and basically saying they see Bitcoin as a modern-day shield. They're putting it in the same protective bucket as a classic safe haven like silver, especially when gold is already hitting all-time highs.
And this just perfectly paints the new picture, doesn't it? For decades, when investors got nervous, they ran to the tried-and-true fortresses of gold and silver. But now, well, there's a new contender in the arena. Bitcoin has officially stepped into the ring and joined the conversation as a potential new store of value.
Okay, but let's just hit pause for a second here. It is absolutely crucial to remember that investing in crypto is still like walking on a tightrope without a safety net. An expert's opinion is not a guarantee, and huge global problems can still send massive shockwaves through the crypto market. So understanding this volatility is key.
And that volatility, that tightrope walk, brings us straight to our second argument, the very real, very extreme risk. And to get it, you have to follow the money. We need to look at what the biggest players in this game, the so-called whales, are doing.
So who are these whales? Simple. They're people or groups holding enormous amounts of crypto. I mean, their trades are so big they can literally create tsunamis in the market, causing prices to either shoot to the moon or crash and burn in the blink of an eye. The real question is, what are they up to right now?
And this is where the plot really thickens. If you look at a platform like Hyperliquid, the whales are making some really confusing, almost contradictory moves. They're betting big that Bitcoin's price is going to go up, but at the same time, they're betting that silver, a classic safe haven, is going to fall. Oh, and they also think oil is going up because of global tensions. So, are they ditching traditional safe havens for digital ones? It's really hard to say, and it just goes to show how unpredictable their strategies can be.
To make sense of any of this, you have to understand the main ingredient here, speculative capital. This is fast money. It's not here for the long haul. It rushes into markets looking for a quick profit and then rushes out just as fast. And the biggest side effect of all this money sloshing around? You guessed it, massive, massive volatility.
But while all that speculative chaos is happening on the surface, something much deeper, something way more important, is being built underneath. And that brings us to argument number 3, the financial revolution. A whole new economic infrastructure is quietly taking shape.
And listen, this isn't just some abstract idea. A very real system is being built by the biggest names you can think of. You've got giants like BlackRock and Fidelity going all in on spot ETFs. Then you have institutions like the CME Group getting futures contracts ready for assets like Cardano and Chainlink. Now, futures are just regulated bets on future prices, and when they exist, it's a huge sign that a market is growing up. The game is really leveling up.
So why does all this institutional stuff matter? Well, it boils down to 3 huge advantages. First, legitimacy. It's like a seal of approval that the crypto world has been desperately needing. Second, access. This just throws the doors wide open for millions of new investors. And third, simplicity. It creates way easier methods to invest so you don't have to deal with the headache of managing complicated digital wallets. And if you want a sense of the scale of this change, just look at this number, $15 billion. That's how much value in real-world assets has already been put onto the Ethereum network alone. This isn't something that's coming in the future. It is happening right now with astronomical sums of money.
So what in the world is this tokenization of real-world assets, or RWA? It's actually a pretty cool idea. Imagine taking a physical thing, like a skyscraper or a piece of art, and converting its value into digital tokens on a blockchain. The benefits are amazing. You can trade it 24/7, and it lets people own a tiny piece of a huge asset. It basically makes investing more accessible to everyone.
But, as always, the devil's in the details. Take this example from Ondo Finance with its tokenized stocks. It's so important to understand this. You are not buying an actual share of a company. What you're getting is called a derivative. It's a token whose value just tracks the stock's price, but it doesn't give you the rights of a true shareholder, like voting, and that's a key difference.
Okay, so we've looked at all the big ideas. Now let's zoom back in and see how this all plays out on the ground. Because what we have, more than anything, is a market of stunning contrasts, where all three of these forces, refuge, risk, and revolution, are colliding at full speed.
And you really can't find a better example of that contrast than this. On one side, you've got something like Near Protocol just exploding, gaining almost 20% in a single day. Then on the complete other end of the spectrum, you have a major project like Cardano breaking through a key price floor, getting pushed down by those big whales selling off. It's like two different worlds existing in the very same market.
And then you get to the ultimate puzzle box, Pi Network. It perfectly represents the whole dilemma of this market. On one hand, it has this absolutely massive, passionate community. But on the other, there are over 9 billion tokens out there, which creates a huge risk of inflation. And since it's not on major exchanges yet, its actual real-world value is a complete mystery.
So all of this leaves us with the final, massive question. With all this big money flowing in, and real-world assets being pulled onto the blockchain, and all these crazy contrasts playing out every single day, are we actually watching the birth of a new, more mature chapter in finance? Or is this just the next big bubble, the next wave of speculation? Only this time, it's wearing a fancier suit. The debate is definitely wide open.